Let's take a look at some charts on Bitcoin from this week's article on Brave New Coin. So by market cap, Bitcoin continues to dominate all other coins, assets, and DeFi shenanigans by several multiples. The closest competitor would be Ethereum. And much of BTC's price action has been uncorrelated from the rest of the ecosystem largely. DeFi had its moment over the past few months, whereas BTC didn't really respond to much of that. Ethereum also was a part of that DeFi boom in August, September, whereas BTC stagnated. Link obviously took off. BTC didn't follow that as much from July through September. So lack of correlations are generally more bullish for crypto based on backtesting, historic trends, that sort of thing. Generally, when we're bearish, we are highly correlated. When we're bullish, things move separately. Like today, BTC is up 2-3%, whatever it is. Everything else is kind of flat or down on the day. And you'll see the exaggeration of that on the BTC pairs, where the alt BTC pairs are down 5 to 10% on the day. If we start with the basics, hash rate and difficulty of the network. Important to look at when you're looking for decentralization of the network, security of the network, geographical distribution of the physical miners. What type of electricity are we looking at here? Are we looking at dirty coal? Are we looking at clean geothermal? Are we looking at wind? All these things will become a bigger part of the conversation the bigger BTC gets. You'll see a lot of electricity calculations saying that the network is bigger than some specific country. But the alternative discussion is we don't know the electricity consumption of, let's say, Citibank or Goldman Sachs, right? So it's tough to even compare the two in a conversation. But if we just look at hash rate and difficulty, both are posting continuous all-time highs. A lot of that is because we've had 11 miners released this year, 11 ASIC miners. Profits right now are kind of small, to be honest. I think part of that is just because of the explosion in hash rate. The more hash rate you get, the less profitability the miners have. And because we've had 11 ASICs this year, not as many as 2019, I don't think, but a significant amount, certainly. Lots of new hash rate in the ecosystem. So there will be a new equilibrium as the new miners soak up more hash rate. The old miners become less profitable and get shut off temporarily or forever. And then profitability may or may not increase, but that's all part of the equation here. The other part of this is price. If price keeps going up, profitability will go up. If profitability goes up, we'll probably get more miners added to the network. So it's this continuous loop of number of ASICs, price, fees, total hash rate, all plays a role in mining profitability. If we look at transactions per day and transaction sizes, transactions per day are generally flat or down over the mid-year to now. Nothing too exciting on that realm. And there may never be explosive growth in transactions as the network becomes more lean, as we get batching increasing. There's continual new normals here because transactions are sent in different ways. You get fewer transactions that are sent together as optimization increases. So you have to kind of look at that in with caveats because it's a different situation. Does it look as bullish as it looked from 2015 to 2017? No, it doesn't. Transactions aren't increasing. Are they not increasing because there's increased optimization, or are they just not increasing because the network traffic is lower? I don't think it's super easy to tell one way or the other. Transaction sizes are just flat, basically over the past year. Nothing too crazy there. One thing you can look at is the total average block size, which continues to increase-ish. Since July 2018, certainly we're on an upward trend. We're not smacking all-time highs or anything, but way above the previous 1 megabyte ceiling. Current ceiling is 2 to 4 megabytes theoretically. Fees have not increased as block size has increased. So again, that speaks to optimization of the network itself, scalability. That's what you want to see. You don't want to see an increase in transactions and a linear increase in fees. Then you have issues there. So the scaling measures with SegWit appear to be working, batching, that sort of thing. If we look at NVT, an inverse metric of economic utility relative to market cap and active addresses, NVT has essentially continued to rise since 2018. Some of this may be inflationary as far as the number of coins available in regards to market cap. But in general, in a vacuum, this isn't bullish specifically, you want to see NVT decreasing over time as it did from 2014 to 2016. Now, there's clearly a downward trend here and then an upward trend here. I've never been a massive fan of NVT anyway, but just something to consider. And active addresses are extremely bullish. They're very near an all-time high. Anything above 1 million should be considered highly bullish. This is on a 30-day average. On a daily level, active addresses have continued to peak above 1 million several days this year. So that's bullish for any network in a vacuum. If we look at MVRV, another one of these inverse metrics of on-chain activity relative to price, if MVRV is above 7, historically it's been overbought territory, as in based on on-chain activity, the network's worth too much, so it should come down. We're on the opposite side of that right now, so there's plenty of upside potential here. You can see how it looked from 2012 to 2014, 2016 to 2018. It's just a grind to the upside to 7+. So we're not there yet. If we look at the age of unspent coins, which is always super interesting, lots of different stories here. The big story for me is the number of coins that haven't moved in 5+ years, which is the blue side here. These could be coins that are lost forever, or people holding them in wallets, that sort of thing. You don't really know, but at some point you have to assume, all right, some of these coins are just gone forever, right? 22% of the total network is currently hasn't moved in 5+ years. Something that I've noticed specifically is when the 1 to 3 month aged coins reach over 15%, we've put in a high, a macro high, whether it's an all-time high or a local high. We're currently around 8%, so again, plenty of room for upside there. I think the reason this increases is because as price goes higher and higher and higher, you're seeing more and more people move coins to an exchange to sell. It's really that simple. If coins are on the move, you have to assume they're going to be sold. That's just kind of how it is. Sure, they can be moved to storage, custody, but in general, if you see a large influx of coin movements for anything, any coin, it's generally to be sold. If we look at the CME Bitcoin futures, which are cash settled, volumes and open interests have been on the high side historically over the past few months, definitely declining though from August to October. The same thing with backed, which is both cash settled and physically settled. Definitely a new normal for volumes and open interest, but over the past few months, both have declined, which I think is natural. If price breaks the 13K local high or the 12K current level, there should be an increased interest in both of these products, backed and CME. All right, flipping to technicals. If we zoom way out, use this really great indicator called the moving average multiplier. So the green here is the 2-year moving average. Red is 5 times that moving average. So one way to think about this is, where do I buy? Where do I sell? We are currently, again, showing plenty of room for upside to 25K plus. This catches the highs and lows fairly nicely. I think this is 3x instead of 5x, but if you adjust this slightly, you'll get a little better numbers probably. But you can use this to set your expectations. You can use this to adjust your emotions. Yes, we were at 200 something in 2013, but we hadn't broken below the multiplier yet. The same thing with 2017, 2018. It's kind of a measure of how bullish or bearish are we. Should I consider buying, selling, that sort of thing. Perfect indicator, high time frames, something to watch going forward over the next few months. If we zoom into the daily and we look at the 50, the 200, EMAs, yearly pivots, VPVR, RSI, Bitfinex open interest. First thing I see is a ton of volume below price level. So it says there's tons of support below the current price. We're above both of the EMAs that I pay attention to, the 50 and the 200. Price is bullish. We're soon to be knocking on this yearly pivot, which is going to be a pretty big resistance level. It's essentially the previous 2 local highs as well, but the trend looks really good. Bitfinex is pretty massively long here, which isn't a super terrible problem at the moment. No bull or bear divs on RSI. So all this together just looks just super, super bullish to me. And then if we look at the cloud, we had this bullish TK recross above the cloud a few days ago. And it's only happened 12 times for Bitcoin since 2012. 91% of the time it's led to bullish continuation. So this is an incredibly high probability signal that shouldn't be ignored. And it speaks to a strong possibility that we go higher from here. I mean, it's that simple. if you're short up here, I wish you luck. And lastly, looking at the CME futures contract dates, which have been important for price volatility. The next contract date is October 30th, the expiry. So we kind of have another week of strong unidirectional price movement with the expectation after that of some sort of crazy price volatility because of the futures contract expiration. So overall, everything looks good in the BTC realm. It's uncorrelated from alts right now. It is chugging on the hash rate. Active addresses are poking above 1 million. Technicals look extremely bullish in any measure that I can find. So I think we're in for some multi-week, multi-month uptrend right now.